And the Nigeria Liquified Natural Gas Limited says it plans to commence the supply of 100% of its LPG production to the Nigerian market. Now, will this add to the much needed growth of the domestic LPG market? Felix Ekundayo, Managing Director at Asiko Energy, joins me to discuss this. Felix, thank you so much for joining us today. Quite an interesting move here on the part of the NLNG to supply 100% of its LPG production to the market. Now, just for context, help us understand what the supply gap is in the market currently and the extent to which this supply at 100% will address that gap.
Okay, thank you very much for having me on your show. I think it is important to put the announcement into context and also to commend NLNG significantly for this effort. You may or may not be aware, but this is the 15th year of the intervention by Nigerian NLG in the domestic LPG program. So they actually officially kicked off the DOM LPG project in 2007, from when consumption has jumped from 50,000 tons a year to roughly maybe 1.4 million tons a year now. That gives you an idea of the program, the impact of NLNG in terms of the program that birthed. Now, as to the specific question in terms of the supply, NLNG had already committed a significant proportion of its production of butane, one of the two components of LPG, to Nigeria anyway. So the significance here is that there will be an incremental amount, depending on their production and depending on the addition of new trains to that. However, the significance is also the fact that they are now committing 100% of their propane supply into the country. So combined, it should mean somewhere close to about 800,000 tons of material in the country. This is still short of the, if you compare the supply-demand gap, this is still short of what the demand point is now. So the question, therefore, is that, look, NLNG has been the backbone of this program, but however, NLNG is not the only major producer out of Nigeria. There are actually two other significant producers who equally need to step up and fill the gap as NLNG has done. So we would like to congratulate NLNG for the announcement, and it's an improvement on the current situation.
Now, I'd like to be a little bit more specific because I think before now, analysts have told us that domestic players make up about 30%, or rather, the country imports 70% of LPG needs, and domestic players, make up the rest, the other 30%. So from a percentage term point of view, how much of that what has moved on the domestic side in terms of what we're going to be importing and what will be available locally?
Okay, it's an emotive issue, this issue of imports against exports business, but those numbers are not quite correct. So if you were to take the 1.4 million tons, I would say that domestic suppliers provide probably about 60% of that. What people look at when they talk about a different percentage split is they are talking about things that arrive by ship, but there's also inland production that contributes to this. So if you were looking at pure exports that are not, pure imports that are not originated out of Nigeria, then it's probably about 45%. So it isn't quite right to be saying that we import 70%. That's totally inaccurate. What is happening with the interventions by the CBN, by NLNG, by NCDMBA and others, and private sector individuals, what is happening is that the proportion of local producers is also growing rapidly, and that has been the most significant aspect we've seen in the last 18 months.
Okay, because that was going to be my next question. I was going to ask you, what is the strategy to encourage more domestic investments, domestic players into the market? I mean, you and I are aware of what happened last December, the shortfall, the scarcity, the sharp increase in the price of the LPG, gas, and all of that. So right now, this year, are we going to see a significant number of domestic players coming on board? What is the strategy for the year?
It really does depend on policy intervention. And what we saw last year was a spike in LPG prices that was effectively an own goal, I have to say. It is interesting to note that one of the opening statements you made was about the customs target. You have a situation where customs has suddenly been given a target that's 100% of what they did last year. The progenitor of the real issue behind the spike in November, December last year was actually a customs issue. It was a VAT issue that was imposed on certain members of or certain stakeholders in the LPG arena, which therefore made the supply of made them back out of the supply of LPG. So there was a shortfall in supply. With that shortfall, there came a spike in pricing. Okay, because demand kept pace with I think 15-20% growth rate we've been seeing. So if you cut supply, you're going to see a spike in pricing. What I am hoping is that by imposing these targets without actually accommodating sectoral differences and without punitive penalties against certain players, which is what happened last year, I'm hoping that we have a much more reasonable and nuanced approach to customs tariffs. Okay, so the outcome of growth, the impact on the growth aspect is entirely within the policy arena of the government and how they manage that. On the issue of investment by private sector companies, they continue to from what we see in terms of statistics, in terms of data, there continues to be investment in this sector because everybody is bullish about the pace of growth of LPG. One aspect that is also equally important is that we have focused almost specifically on domestic LPG consumption, but the government has also been talking about the auto gas side. The auto gas side has a significant role to play, but it's currently held back by the subsidy on gasoline. So there are a number of interplays here, but by and large, the outlook for us is positive on both domestic LPG and the auto gas side.